Where is WL Ross and Company investing these days? What's it divesting? Joining us with all of the answers is the company's Vice Chairman, James Lockhart. He's the former Director of the Federal Housing Finance Agency, served on the Financial Stability Oversight Board, of course, overseeing the TARP. And then we should mention, for context, that Invesco also bought WL Ross and Company about 2006. And what, 7 private equity funds that it's up to now?
Somewhere around there. Private equity, private debt, yes.
Raising money for a new fund to invest particularly in...
Well, we've been very active investing in a lot of different industries. We go from industry to industry depending on where the action is, where there's some dislocation. What we try to do is find good management teams and give them the capital to grow. At the moment, we're probably spending more time in financial services, which is one of the areas I do, in Europe, and probably selling more in the U.S. just because of the big recovery we've had in financial services. Yes,
this is fascinating. What are you selling in the U.S.? Where did you get your value, and what industries are you exiting now?
Well, in the U.S., in financial services, we did a whole series of banks, community banks, sort of 3 to 10 billion, rolled up into 5 different platforms. We sold 2 of them already. We have a third one, Bank of Cascades, that's being acquired by First Interstate. We've had a whole series of mortgage companies, servicing and origination, and again, we've sold, I think, 3 of the 4 we had. But we're still seeing a lot of opportunity, but mainly in Europe.
Yes, so as regards the US, you're sort of getting out of financial services. You think that that's an area that's been picked over?
Yeah, well, the valuations have come up, obviously, with deregulation being talked about a lot, with higher interest rate, that really helps banks. And so the valuations have come back to more normal levels, and so it's time for us to start thinking about exits.
What do you see in terms of the political landscape over the coming 12 months? Are you more concerned than you were about, say, black swan events?
Well, there's a lot of uncertainty out there. There's no doubt about it. I mean, you know, we have a new president here, the Brexit in the UK. I think this year there's going to be at least 4 elections in Europe, maybe even 5 if Italy does it. So Germany, France. So there's a lot of uncertainty out there. On the other hand, the economies are recovering. We are seeing better growth. Unemployment's coming down in the U.S. and in Europe. So there are opportunities out there.
So this time last year, we would have described this as a low growth, low interest rate world. Where are we in that cycle? Are interest rates beginning to increase, or is it just purely in the United States?
Well, I think we're starting to see interest rate increase, certainly in the U.S., but in some of the European countries as well, France and Italy, and some of the ones that people are a little more worried about, their interest rates are starting to move up. But the Germans are still very low, and obviously the Swiss are still very low.
You've said there's lots of PE money chasing deals. Just before we leave financial services, are you still interested in mortgage originators here in the U.S.? What do you see for the future of housing?
Well, I think housing will be strong. The millennials will start to buy houses at some point, we hope. Certainly my kids have. They're a little older than millennials. But, you know, so housing, I think, will continue to grow. I think the real issue will be mortgage originations, because we've had a refinancing boom with lower interest rates, and now that mortgage rates have moved up, we're going to see less of refinancings, but more people purchasing houses and getting mortgages for that. So I would think mortgages will probably shrink by about originations by 20% this year, but still be reasonably strong.
So there may be opportunities in that space?
Yes.
Okay. Let's move to Europe then. You've obviously been involved in Europe for a while. You were one of the first investors in some of the most distressed debt in right. Europe, converting it to equity for the most part. Then Brexit happened.
Yeah.
Now what does Europe look like?
Well, Europe is still some opportunities there, but you got to be careful. You know, obviously we were very successful in the Bank of Ireland. We have a mezzanine real estate fund in Ireland as well, which is doing very well. We have investments in, we just sold our last piece of Virgin Money in the UK that grew really dramatically in under 5 years, from a couple $100 million to 33 billion pounds. So we've seen some good opportunities there. We're continuing to look in Spain, the UK. There's some opportunities still, certainly in Ireland, and some Scandinavia. So there are pockets of opportunity in lots of different places.
Now, are you talking commercial real estate in these areas or financial services? When you say mezzanine, 60% to 80%?
Oh, yeah, that was real estate loans, basically, mezzanine real estate in Ireland. And we also have a joint funds with Invesco in real estate that's been very active in Europe as well.
You're betting on Ireland more than, say, Germany when it comes to commercial real estate, or even the Netherlands, other places that have been mentioned as potential hubs for the banks and so forth?
Yeah, well, we spent a lot of time in Ireland, and we've done reasonably well there, and we have a really good team there that we partner with, and we think it's going to have some ups and downs from Brexit. Certainly, some of their exports to the UK are going to suffer with where the pound is now. But on the other hand, I think there'll be some financial services moving into Dublin, and that should really help our real estate.
You've been looking around Europe at banks and financial services as you do. You still haven't touched Italy?
We've looked at Italy. We've looked at several banks there. We haven't really gotten comfortable yet with their legal system and the bank regulatory system. But it's a possibility. As I said, we've looked at Spain. We're very actively looking at Spain at the moment. We have an investment in Greece and Cyprus as well.
What about back to the US, the Permian Basin? You definitely were nibbling there and even buying. Will there be more consolidation? Has that been picked over? Is that all done now?
Well, I think there's a lot of opportunity still in the Permian Basin. There's a lot of companies that got too leveraged, borrowed too much money, and now have to straighten out their balance sheets. Obviously, oil prices have come back somewhat, and so I think there's some that have attractive reserves but ugly balance sheets, and that will be the opportunity to potentially buy debt and convert it to equity.
But you send people down there and you really examine the reserves and
Yeah, we have a team that's really experts in the whole area of energy reserves and work with consultants, obviously, and they've done a good job buying
When do
debt.
we hit bottom of that cycle?
We may have already hit it. I think if OPEC really sticks to the deal of cutting back, I think we may have bottomed out. And this could be a prolonged bottom, but I think we may have bottomed out.
What are you valuing oil prices at when you look at these?
We don't value it that much higher than it is today. Maybe about $60 a barrel is probably the average.
I want to briefly ask you about a couple of more areas. Retail in the US, you've been maybe looking?
Well, retail is something we historically have not done. Obviously, there's a lot of retail companies in trouble, but we like sort of assets, and
yes.
and retail can be pretty fickle. So, from our standpoint, we haven't spent much time in that space.
Okay, building material, construction materials. There may be coal for them in the next 6 to 12 months.
Yeah, we've been pretty active in building materials, and we think, given the infrastructure plan, the $1 trillion infrastructure plan that President Trump has talked about, certainly building the wall or even pieces of the wall is going to take a lot of building materials. So we think there's an opportunity there between the infrastructure and potential.
Can you give us any more specifics about what kinds of building material companies?
Well, we've been mainly in sort of the concrete aggregate space, which is the real basics of building.
Which you have been for a while.
Yeah.
Latin America and Asia, just briefly. I know you've been looking at Brazil. You're out of Mexico completely. No more interest in Mexico. Sold the textile.
Yeah, well, I think the political risk in Mexico is very large at the moment, unfortunately. We're spending some time in Brazil, yes. We think that economy will come back. The government has changed, so it's somewhat more stable. And in Asia, we've been active off and on for a long time. We actually have a clean energy fund in Beijing, and we've worked well with the Chinese over the years.
Very quickly, how many Fed rate hikes next year, and does the dollar increase in strength or decrease in strength?
Well, our view is 2, but we've been wrong so many times. I don't want to make a cast iron promise on that one. The dollar will probably continue to strengthen with interest rates going up. It's our view.